So this chapter I think is a little bit easier than what we've been doing, but it's still building on what we've already done. And I posted problem number 926 and 929. I think that was the two I posted. No, 927, sorry, for you to look at. And I really don't want to go over these in the video because I think they're pretty easy to follow. So what I wanted to do instead is kind of prep you a little bit for the quiz. So in the quiz, you are comparing and contrasting variable and absorption costing. And you should have already done the homework at this point because I'm posting this on Saturday afternoon. And if you haven't, then you should at least have read the problem and be familiar with the content in the chapter and looked over the chapter. But when we do the income statement, so things I want to point out to you, absorption costing, again, you should have already kind of done this, but the way I remember it is it absorbs all manufacturing costs into the product. And so direct materials, and we're starting to break it down a little bit more between, and we started this in other chapters, direct materials, direct labor, variable manufacturing overhead, and my computer's running really slow today. I don't know why. And then fixed manufacturing overhead. And then with variable costing, we're absorbing, well, I don't want to say absorb because that's absorption, but we've got all variable cost. I don't want to say absorbed into the product. All variable cost shown on a contribution margin income statement. And so what I'm really trying to get at here is variable costing is managerial accounting, where we're looking at it from the managing perspective, where absorption is financial accounting, meaning it's required by generally accepted accounting principles. So the reason we do variable costing is to make management decisions. It's not something we can issue to external parties like the bank or the Security Exchange Commission or our stockholders. It's something we keep internally, and it helps us analyze our costs better because fixed is fixed. Fixed is not going to change it within a relevant range. However, variable can change. And so we use a variable costing income statement to analyze those changes. And so in comparing, you've got direct materials, you've got direct labor, and you've got variable manufacturing overhead. So in a variable income statement, fixed manufacturing overhead is considered a period expense, not a product cost. You expense it, whether you sell the product or not. Whereas with absorption costing, fixed manufacturing overhead is a product cost, and it's expensed through cost of goods sold. Okay, and so when we do an income statement, and I'm going to come over here and do an income statement for absorption costing, we have sales, we have cost of goods sold, and that gives us gross margin, and this is, again, generally accepted accounting principles. Then we have our operating expenses, and there's so much more to this, but for just this chapter, we're just going to look at it this way, and then we have operating income. And so my sales obviously it's going to be the same either way, but my cost of goods sold is going to include direct material, direct labor, variable manufacturing overhead, and fixed manufacturing overhead. For managerial, for a variable costing income statement, we have sales, we have variable cost, and that can be manufacturing, that can be marketing, whatever variable costs are, and then our sales minus all of our variable costs is what we call the contribution margin. Then we subtract our fixed cost, and those can be manufacturing, those can be marketing, and those can be sales and administrative. I shouldn't say sales since we did marketing, so administrative, we'll call it administrative. And then we have operating income. So really, the only difference between these two is this fixed manufacturing overhead, because this manufacturing right here is direct material, direct labor, and variable manufacturing overhead. So the only difference in these two is that in this one, we are attaching fixed manufacturing overhead to the product. And in a variable costing income statement, we're expensing fixed manufacturing overhead, whether the product sells or not. And again, it helps us make management decisions. So when you're doing your quiz, what I'm going to ask you to do is I'm going to ask you to do a variable income statement, and I'm going to ask you to do an absorption income statement. And it's just like your homework. It's just like the videos that I posted, but you're going to be comparing, and you're also going to be doing it for 2 years. So you're going to have 2017, 2018, you're going to have sales. So if this was my absorption, you're going to have sales, you're going to have cost of goods sold, you're going to have gross margin, you're going to have operating expenses, and you're going to have income, net income. For variable, you're going to do the same thing. You're going to have sales, but you're going to have instead your variable expenses, whatever those are, and then you're going to have contribution margin. Then you'll have your fixed, and then you'll have income. Now, these two incomes may or may not be the same depending on whether or not there's ending inventory. So you've got to really watch your inventory accounts. So, for example, let's say that I produced 200,000 units and that I sold 160,000. And it was my first year of operations. So, how many do I have in ending inventory? I've got 40,000. 40,000 units sitting in ending inventory. That ending inventory becomes beginning inventory for the next year. So let's just say in the same problem, my fixed overhead, my fixed manufacturing overhead is let's say $7 million. This is my fixed manufacturing overhead. So in absorption costing, I'm going to take that $7 million and I'm going to allocate it to my units based on my production. So I would divide by my 200,000 units produced. And I would come up with $35 fixed manufacturing overhead per unit. And then I would add that, like we did up here, I would add that to my direct material, direct labor, variable manufacturing overhead. And then I would have my cost of goods sold. So my sales would be based on the 160. My cost of goods sold would be based on the 160. And then I would calculate everything else. But if it's variable costing, if I'm doing the variable costing income statement, I'm not going to worry about how much it was per unit. I'm going to put it down here. I'm going to expense the whole thing. So what we did just now is we expensed, so let's just say I don't have any other cost, just looking at fixed overhead, which is not the way you're going to do your problem, and you should know that if you've done any of the homework. It's my units sold times $35 is all I'm going to, they don't like that dollar sign, is all I'm going to expense. All right, so the difference between 5.6 million and 7 million, let's come over here and see what that is. So 7 million, or we'll do it this way, 7 million minus 5.6 million is 1,400,000. If I divide that by $35, so 1.4 million divided by $35, that's 40,000. That is the 40,000 units sitting in ending inventory. So when a company does variable costing, an income statement, they can reconcile it back to absorption costing by analyzing their ending inventory. And again, I'm posting this late intentionally because I want you to have worked through the homework and gone through the chapter. The examples I posted were excellent resources for you to do the homework, so hopefully you made it through that with no problem. But I wanted you to see this before you do the quiz, just kind of as a second look at what we're doing and explanation. If you have any questions, please let me know. We're almost at the end of this semester. It's been good, and I've been impressed with your work, so keep it up. Thanks.